Hello, good evening, everybody. Welcome to AgriTracker Facebook page and our YouTube channel. All right. So, just a quick sound check before we start our event. Do you guys can hear us? If you can hear us, can you give us a good or thumbs up or everything so that we know that you can hear us loud and clear. All right. Don't forget to help us to share this Facebook live or even YouTube channel to your friends that would like to invest in Singapore stock market. Because tonight we got our topic is we're going to talk about banks in Singapore, right? And probably most of our Malaysian investor will wonder why we would not no why we don't want to invest in locally like our Maybank, CMB, etc. But later we'll show you guys on what are so special about Singapore bank. All right. Can you guys hear us? While waiting for the response, actually, we have some announcement to make tonight, and so we have Joey here. Going to join us later to share how you can actually, how the platform that you can utilize to invest in Singapore market. And I will show Bank already prepared some very good deal, okay, to give all the investor here very decent channel, okay, for you guys to have directly invest in Singapore. Okay, without further ado, let us invite Joey from Bank to share with us what are the good deals that Bank offer to all the investor in Malaysia.
Hi, Chris. Good evening, everyone. Hi, my name is Joey. I'm from M Investment Bank. Can you guys hear me? Is the sound okay?
Yeah.
Yeah, so I can proceed, yeah? Sorry about my environment. I'm actually stuck in the car right now. So, yeah, so basically my duty today, first of all, I would like to thank Chris Tang Equities Tracker for having us tonight. So basically, my duty tonight is to let you know what you can enjoy if you open a trading account with M Investment Bank. So basically, next slide. If we have the slide, you can flash it out. Yeah, there you go. Okay, so on the 1st of November, M Equities by M Investment Bank, we actually roll out a campaign in collaboration with SGX, Singapore Limited Exchange. So basically, you need to open an account with M Equity, and then you start trading stocks in Singapore market. You will stand a chance to win up to 4,000 Sing dollar, from us. So starting from 1st November until next year, 29th of February, so total of 4 months time. So throughout this 4 months time, what you can do is doesn't matter what online or offline, buy or sell through the M Equities platform, we will give you up to $30 of brokerage cashback per client per month. Okay, so on top of that, we will also select the top 3 clients from each month, every month, with who achieve the highest trade value. They will win this grand prize $150, the first one. Second winner will win $100. The third winner will win $50 from us. So yeah, the more you trade, the more cashback you will get from us. That's basically the deal that we are offering in M Investment Bank. So if you would like to know more, you can scan on the QR code. Yeah, next slide. Scan on the QR code. This is the terms and conditions so that you can understand further on how the mechanics works and things like that. Scan, or you could just quickly snap a photo now and you can read later. Okay, next slide. So for those who would like to open an account with M Equities, you can scan this form. This form will lead you to our e-form on our website, mequities.com.my, and then you can fill up your informations there and all. Then when you submit to us, our sales force will reach out to you for to open an account with you lah. Then the next slide. Oh, okay. So besides all these, we can actually stay connected. You can stay connected with us, Equities, on our official Telegram channel. So all you got to do is just to scan this QR code, and then it will lead you to this Telegram page where you can join our channel there. So on a daily basis, we will share the research reports, all the updated market news and things like that on our Telegram channel. All right. So that's all that I can share from my side. Thank you so much, everyone. Thank you, Chris. Have a great session ahead.
All right. Thank you, Joey, for wonderful sharing. So, all the investor out there, wait no more. This is a very good chance that equities offer all this discount and all this promotion. So that you can win up to 4,000 Sing dollar cash. If you're trading in Singapore. All right. So actually, beside there's a trading platform. Tonight we're going to give every one of us here a little bit education on the Singapore stock market. So information are there. We already later going to show you what are the market landscape in Singapore, and probably explore three of the largest bank in Southeast Asia, and also there are a lot of opportunity in Singapore. Beside banks, there are also others companies, for example, the real estate investment trust. And all these are actually, later on I'm going to show you, we have a AgriTracker proprietary platform that's available for public for free, totally free, on how you can utilize all these tools for free so that you can make your informed investment decision. All right. Okay. Now let's start for our tonight session. Okay. So before I begin, so actually there's always have to be clear. In tonight's session, there's no buy or sell recommendations. It's all educational purposes. So if you want to invest in Singapore and do your own research, and of course, if you are have your professional consultant, always engage with your professional consultant to seek for their opinions. All right. So there's no stock tips. Okay, in summary. So banks in Singapore. Let's start it. Okay. First of all, why in tonight's session we talk about banks, right? So for some of the investor in Malaysia that must be wondering, why I should invest in bank, and some more I want to invest in Singapore Stock Exchange. So there are a few benefits that you can obtain from have a portfolio set up in Singapore market. For example, there could be some currency hedging purposes. Because based on historical data, right? A Singapore dollar actually appreciate 3% annually for the past decades. All right. Sing dollars actually appreciate averagely 3% a year compared to ringgit Malaysia. So if the history going to repeat itself, probably having some exposure in Sing dollars, it could be a good choice. So then next is what are the instruments that you should put. So if you're looking at stock market, right? I believe banks could be the most one of the most stable business in the economy, right? Because if you think about it, banks are actually very hard to lose money. If the banks have a track record that making a very handsome profit and have a decent management on their asset, right? So it is really hard to lose money for a bank. It's very hard to see a year of loss making for banks. Besides, there's a COVID-19 pandemic, right? So their business are giving out loans. So all the loan has been given out to all these borrowers, and what they what's their job is to just to do the collection. So the business already been done. So the most important thing is how well they're going to collect their their debts, right? Yeah. So the benefit of having exposure in Singapore banks, you have the benefit of diversification of a portfolio in another country, and also probably you can also having some exposure to to tap on some of the growth opportunity, right? Because if you think about it, ASEAN or even Southeast Asia actually has a very huge potential. For example, our GDP growth in emerging country, I will categorize our Southeast Asia as emerging country. Our GDP growth is much faster than the developed countries, right? Developed countries like US, UK, they even say some says there are some recession in advanced country, right? But look at what our emerging countries are doing. Our GDP is basically going as twice as fast compared to some of the developed countries. So banks business definitely going to benefit from the growing of GDP, right? And also, don't forget we have very strong growth in our regional trade, also in ASEAN Pacific. Okay, without further ado, let's go into more detail, right, to share on what are the position of the banks, especially Singapore banks in our region. Based on the study research of this Zigyan, right, this study showing that the Global Financial Centers Index are you can see from the ranking of this GFCI Global Financial Center Index, of this globally, all right, Singapore actually ranked third in the world, all right, that have the most established and uh, well managed banks, all right. They got rank number 3, uh, even just after New York and London, and then followed by Hong Kong and others North American country, right? And in terms of the Asia Pacific region, right, you can look at the central, where Singapore also take the lead. They are the highest ranking in terms of the Global Financial Central Index, followed by Hong Kong and Shanghai and Seoul and Shenzhen. Okay, to look at some of the potential in emerging market. So as I said, like Malaysia and Singapore are the emerging market. I believe Singapore as a regional trading hub and the transportation hub, they will benefit from all this growing in global trade, right? So this global trade activities are essentially, you can see our Southeast Asia we have immense of long-term potential because of our population growth, right? We likely to have growing from 660 million person to become 726 million population by 2030. And our GDP even more fantastic, almost double. Yeah, it actually doubled from 2020 level to 6.3 trillion US dollar. Right, that is huge. And you see the trade also growing faster, and most importantly, we have a lot of FDIs coming in to invest in this region. And all these activities, right, the investment from foreign country requires borrowings from bank and need the support from all this financing, right? So in Southeast Asia country, we are the third largest population globally after China and India. So it's a very, very important region, right? And some of the potential in Southeast Asia, including if you look at it, our Southeast Asia market, and especially most of the Singapore banks like DBS, UOB, and OCBC have their exposure very, very well exposed to all the Southeast Asia market. And you can see in our country foreign reserve, right? The reserve that Singapore has is 337 billion US dollar. which is a much improvement from 75 billion US dollar. And if you do a quick comparison in the region, they are the highest. And compared to Malaysia, our country has a foreign reserve of 110 billion US dollar. It's improving, definitely it's moving. But in terms of the absolute amount alone, Singapore are actually have a triple than our whole nation foreign reserve. Even they have only 5 million population versus we have 30 million, right? So their country, I would say their foreign reserve, their foreign currency could be very stable against all these others like US dollar, etc. And overall, all these economic data are improving. You can see the current account balance are improving also. In South Asia, what are the potential is that we have even lower debt to equity ratio. So for this case, right, the companies in all this country, which mean they for example Malaysia, we have a stronger financial position, right? And actually quite low, 93% versus some like Japan. There's a national debt to GDP level of more than 200%. Yep. Okay. So this chart basically showing what are the net interest income, which means the income generated from their loan of banks, of the 3 banks in Singapore, DBS, OCBC, and UOB. Their income generated from their loan are actually almost double for the past 10 years. And every quarter, there's not even single quarter that this bank register a loss making quarters, which means the bank business are really, really stable, and they are very decent choices if you are want some exposure. And if you are risk averse to invest in others sector, for example, those in very cyclical sector, for example like semiconductor or even mining, the bank will definitely you can have a very good sleep at night. Okay, let me just quickly explain what is the business model of a bank. For example, bank basically they are making money from 2 sources. They call it fund-based or fee-based. Right on the left, what they call fund-based income, or also known as net interest income, is, I would say, most of the bank actually making money for 80 to 90, probably 80% of their income are making from this net interest income. Is they're profiting from the difference of interest rate or spread. The difference in interest rate between the loan they give out to all these borrower and the interest rate they gave to the depositor from the banks, so that the difference is their margin. All right. Later we share a little bit more detail on this. And the second source of income is actually fee-based income. So also known as non-fund based income, right? And also non-interest income. And just they are making money from basic fees and other services, right? Let's look at the first, the major source of income of net interest income first. So net interest income is just using the bank's interest revenue minus their interest expenses, right? So revenue minus expenses is their profit. So there's another formula that they call NIM, N-I-M, NIM. It actually stands for net interest margin. And net interest margin is the interest they receive, and definitely it's going to be higher, right? Interest they receive, right? Minus the interest they pay to depositor, and divided by the average invested asset, and that's called net interest margin. And this is the profit and the spread they make from all their borrower and depositor. And the second source of income is that the non-interest income. So non-interest income can be various fees they charge to the consumer. For example, your loan application fee, your late payment charges, your penalties, For example, your service charge and your credit card annual charge, right? A lot of it, all these charges are actually basically are non-interest based, all right? They lump it together as a non-interest income. So normally, you guys can give it, all right, just type it out. I have a question. So which type of income are more stable, right? In your opinion, which type of income, interest income or non-interest income are more stable? Right, just type your answer in the comment chat box. So we can just try to be more engagement with the audience here, right? So you don't fall asleep while listening. Okay, let's move on. The banks have their balance sheet also. Just now, the interest income and non-interest income are from their profit and loss statement, right? You can find it in their profit and loss statement. But whereas the other side of the financial statement is the bank's balance sheet. It's also very important to examine the bank's ability to withstand the disruption or withstand the the unforeseen circumstances. So, for example, if you can see the loan they give out all these borrowers and the mortgages, right, is considered as asset for banks, right? The loan they give out to borrowers is actually asset. So if you're putting your money into banks, for example, FD or saving account or current account, it is a bank liabilities because they have to pay you interest and they have to pay you the principal. So there is liabilities to banks. And the difference between the asset and liability is their shareholders' money, the shareholders' equity, right? So the financial statement for banks is actually quite similar to any others companies. So, but then if you think about it, right, when a loan goes bad, right, become a bad debt, right, the amount of asset, which means the borrowers go default, right, they're going to pay less, which means the bank's asset going to be shrink, right? But then the banks very hardly to default on their FD, right? So they have to continue to pay their liability. Their liability will remain constant. So if you think about it, if their liability remain constant, where their asset deteriorate and borrowers become default, this portion shrink. So the shareholder equity will act as a buffer to withstand any withdrawal or any impact from the shock on the economy. Right, so the shareholder equity is very, very important. And also some of the banks actually use this some of the ratio to measure what is the company ability to withstand any problems, right? For example, capital adequacy ratios, etc. Okay, so now let's look into one of the three listed banks in Singapore. There are only three very well known banks listed in Singapore. The will be DBS, UOB, and OCBC. And the number you're showing here is actually the stock code in SGX. So D05, U11, and 039, right? Okay, how important are these three Singapore banks? If you see, these three listed Singapore banks actually comprise of 46% of the Singapore Straits Time Index (STI) weightages. So which means these three banks, when the share price move, right? Let's say go up by 10%. Actually, the STI itself will go up by 4.6%. So it's very, very significant, all right? So if you want to have exposure, so to have a sit tap on the Singapore economy, and these three banks will be a very good proxy to invest into. And these three banks together, they generated about 17.9 billion of net profit in 2022. So this is very 17.9 billion Sing dollar. Can you imagine that kind of amount for a company that for three companies that make in a year, and how much taxes they actually paid to the government? And also, they paid more than 10 billion of dividends to their shareholders, right? So as a shareholders, they can enjoy quite a decent dividend and stable income. All right. What the largest bank in Southeast Asia by the ranking of their asset, right? The total asset is this. DBS Bank actually is the largest bank in Southeast Asia with more than $500 billion of total asset, right? US dollar, $500 billion US dollar in terms of the asset. And on these top three largest bank in Southeast Asia are actually dominated by Singapore banks, DBS, OCBC, and UOB Bank. And our Maybank and CMB only rank number 4 and number 5. And our asset are actually 213 and 149 billion US dollar. So if you add up these two, it's just likely to surpass UOB Bank. All right, if we combine Maybank and CMB, we are only ranking number 3, we're even still lesser than OCBC and DBS Bank. So can you imagine how big is this three Singapore listed bank is? And Maybank is our only company in Malaysia that have a market cap at more than 100 billion. Right, so it is very, very I would say significant as these three banks contribute to the economy in Singapore. All right, look at the market cap. What the data is showing us is that DBS Group, they have a market cap of Sing dollar 82 billion, and followed by OCBC, and the smallest is actually UOB Bank in terms of the market capitalization. So it's what's the valuation to buy out this company? So if you want to have the money, the market cap will mean you need to fork out 45 billion Sing dollar to acquire 100% of UOB Bank, and then you become the owner of the bank. Okay, to compare all these banks, for example, Maybank and CIMB Bank, with these three banks, in terms of the standalone strength, right? There are certain credit rating agencies like Moody, S&P, and Fitch. They gave some of the ratings based on their own assessment. You can see the higher the grade, you can look at the ranking here. Of course, A is better. So the more A you are, then the better. But then you can look at it that way with Maybank is only got A3. So definitely A1 is better than A3 lah. So all these three bank in Singapore, UOB, OCBC, and DBC are gonna have a A1 rating by Moody, whereas our best is A3, CMB actually Baa2, right? And the cost management wise, how lean they are and how efficient they are to control their cost versus the income they generated. So the ratio is smaller the better. And all these three banks in Singapore are actually less than 40% of their cost compared to their income. So our best, our two largest bank in Malaysia, we are 46% and 48% compared to our regional peer. And the return itself, our return, of course, return on average assets, the higher is the better. And again, three banks in Singapore actually have a higher return compared to our Malaysian bank. And also the liquidity loan to deposit ratio, right? It's a ratio where you will use and when $1 received for a bank, how much they lend out, they're giving as a loan. So if they receive $1, Singapore bank actually gave out 82%. For example, UOB Bank gave out 82 cents as loan to others, and whereas they internally they keep 18%, right? They keep 18%. You can see if this ratio is too low, which means the banks isn't very well utilize the fund they receive. But then on the other side, if the ratio is too high, which means you already have a limited growth opportunity, which means you must keep certain cash in the banks, right? To in case there's a withdrawal and bank runs, right? So the max is like 90% will be a max. It will be a reserve ratio. Of course, the banks also get other fundings as well. It's not only from deposit and loan, right? But then the higher the ratio it is, the limited growth, the room for growth for banks. So which means these three banks has a higher room for to increase the loan they can disperse, right? Yeah. Okay, let's look at DBS Bank, all right, the largest bank in Southeast Asia. So DBS Bank actually have the presence in 18 market. So the banks actually have a AA minus and AA1 credit rating among the actually their credit rating is among the highest in the world. Which means they can withstand any shock, right? Economic shock, and still can survive after the shock, right? In terms of the profitability, they are one of the highest ROEs banks, right? Return on equity, which means the shareholders are actually their return is 15% compared to their shareholders fund, and shareholders is making a 15% return from the banks. It's a very decent number, I would say. And also they have very decent asset quality of NPL, which stands for non-performing loans ratio of 1.1%. For this size, $500 billion of US dollar of asset, they have a NPL of 1.1. It's not easy. All right. Right. What are the investment highlight for DBS Bank? I can see they are quite diversified to assess the ASEAN growth, and because the ASEAN have a long-term growth and it is remain intact for many years, so they can tap on this economic growth. And also, their large ASEAN market offers significant growth upside, and also their location in Singapore is actually a bridge between East and West and beneficiary of growing regional trade, right? Okay, again, look at the ROE. They're in the top decile of global peers group, right? You are comparing against other global player, right? This is they in year 2022, the ROE is 15%. It's ranked number 8 globally versus 11.2% in 2015, right? Which means they are showing constant improvement in their profitabilities. And what are the ROE for our Malaysian banks? Actually, our some banks maximum for our Malaysian bank is about I think for Maybank is 11%. That's our numbers. 11%, and CIMB will be less than 10%. And even some of the banks in Malaysia is giving a lower ROE guidance because the tough economic environment, right? And DBS in last year, they still can make a 15% ROE. And these ROE numbers actually improve significantly from 2020 level, 9.1% to 15. And their ROE actually 3 to 4 percentage point improve their peers. The Singapore peers average is about 11.5, right? So I would say they are very good at making money lah. And if you look at the historical data, they are still growing. from their financial revenue and net profit wise, right? From since 2015 to 2022, there's a growing in their revenue at a 6% compounded annual growth rate, right? 6% CAGR. It is double than the country GDP, and their net profit even more fantastic. All right, going from 4.5 billion Sing dollar to 8.2 billion Sing dollar at a CAGR of 9%. All right, and the ROE is same as the what we have explained just now, for 11.2 to 15. Okay, look at their result, and the 9 months 2023, their net profit up 35% to a new high, right? If you think 15% ROE is already amazing, this year alone, they are targeting 18% of ROE or better, right? So what are the main reason that drive their businesses is that you can see from the 9 months of 2022 net profit of from this waterfall chart, right? Their net interest income, which is their core business, actually grew 46%. It's a positive impact on earning that make company make 3 billion more, and also they are growing fee income, and also there are others treasury market exposure. Their sales and other income already grow 16%, and of course there are other expenses grew as well. You can see there are expenses that are growing, so but it then is a negative impact to the earnings. But overall, the numbers is good. Okay, what's the outlook for this bank? For DBS Group CEO, Piyush Gupta actually just shared with the investor in 6th of November. They mentioned that their ROE is projected to be sustained above 17%, right? Even better than 2022 in year 2023. So they have a total equity of 56 billion, right? If you compare the net income for the whole group in financial year 2022 is 8.193 billion or 8,193 million, right, in 2022. 17% of ROE, which means out of this total equity, you can they are likely to make a profit net income of 9.6 billion in financial year 2023 is an 18% increase from what they had achieved last year, right? And also they have some guidance on the outlook of financial year 2024, and the profit before allowance to be higher, right? Profit before allowances to be higher in financial year 2024, which is a good news for the shareholders. Okay, overall, there are others key highlight that mentioned by the management. There are uncertainties from the macroeconomics slowdown and geopolitical risk. Of course, everybody facing that. And the net interest income, they're going to be around 2023 level and supported by higher for longer rates to support their net interest margin, right? And but likely to trade off with loan growth because the interest rate are so high, which means the loan growth might slow down. Okay, and that's the first source of income, and the second source of income is their fee income. The fee income momentum to be sustained by our wealth management and cards business, right? And the profit before allowances to be higher and mid single digit percentage of total income growth, and also the high single digit of expenses growth. Okay, and the total allowances to normalize to 16 to 20 basis point of loan. Yeah, and the key highlight is that the net profit to be maintained around record 2023 level because the whole year for 2023 going to be a historical best year for DBS, and that number likely to continue to sustain into 2024. This is very exciting news and shared by the CEO of the company, DBS. All right. If you look at the historical trend of DBS share price versus the US interest rate, and the DBS share price in orange and the US interest rate in blue. So there are some correlation between the DBS share price versus the US interest rate. Of course, long-term DBS share price is a long-term uptrend. Since even 1990s, right, is a uptrend. But then you can see when interest rate go up, they will also the share price will also higher, and it if it go down, the share price will dip as well. Right. Okay, let's look at the second banks. Is UOB, and one of the bankers of UOB Bank, right, is a banks that founded in 1935 by Dato Wee Keng Chang. And UOB Bank actually have a global network of around 500 branches, and they have offices in 19 countries, right? Mostly in Southeast Asia. Also a very good exposure to the growth of GDP in emerging market. Okay, they are leading Singapore banks. They have established franchise in core market segment. Their business can categorize as retail business, wholesale business, and global market. And they are the best retail banks in Singapore, best SME banks in Singapore, and also they are a very strong player in Singapore dollar treasury instrument. Right, they has won multiple awards and recognition in the industry. And their footprints, they have extensive regional footprint with around 500 offices. Can see they have highest number of outlets, right, branches in Thailand with 153 offices. Sorry, the Indonesia is the highest, 176, and then Thailand and Singapore and Malaysia. All right, and then Greater China, of course, Vietnam, Philippines, Australia, and Myanmar. Okay, so in what are the about 9 months performance so far? By they actually their operating profit grew 67% year on year. For a company that have this size, right? Yeah, operating profit actually grew by 64% year on year. It's very I would say very good growth, right? Operating profit of 2.3 billion Sing dollar, right? For their retail network. And whereas the group wholesale banking, their operating profit also grew year on year 21% to 4.2 billion, right? Then they have a asset management business where the asset under management is more than 170 billion Sing dollar. Okay, what are the loan portfolio breakdown for UOB Bank, right? You can see from this chart, right, they actually have a quite diversified loan portfolio where breakdown by industry, their largest exposure in terms of industry is actually building and construction, and also the housing loan, right? So of course there are other exposure, like you can look at the in terms of the geography. Singapore is about half, and Malaysia only 10% of their loan portfolio, UOB, and also Thailand, China, Indonesia, and other market. In terms of the segment, right, their customer mainly actually large corporates and institution, which is more than 50%. And you can look at the individuals is 34%, and other SME as well, 12%. Okay. Okay, what are the growth driver for UOB banks? They have some they have a very strong retail presence in this high potential regional market. So it can you can see out of all these the outlets, right? This region that they emphasize is actually enjoy very high banking penetration growth potential, right? The higher it is the higher uh, penetration potential, and also uh, on the right side is a larger population. So you can see what are the regions that have Singapore, of course, they are very small population, and the penetration is actually quite saturated. So they are eyeing on the other market, for example, Malaysia, right? Thailand, Indonesia, and Vietnam. This is their core market in Southeast Asia, right? Okay, let's move on into the third and also the last bank we're going to share tonight is OCBC. So for OCBC Bank, they are even founded even earlier than the UOB Bank. They formed in 1932 and from a merger of three local banks. And one of the local bank, right, local Singapore banks, even started in 1912, right? And they have actually more than 400 branches and have the presence in 19 countries. And I think a lot of Malaysians are also a customer of Great Eastern. And right, Great Eastern Insurance is actually a subsidiary of OCBC, right? If you are an insurance agent or even if you are buying insurance from Great Eastern, you are indirectly a customer of OCBC Bank. Okay. So by loan and industry, okay. So this is the breakdown of their loan asset. June 2023, they have a total loan of 297 billion Sing dollar, about a trillion ringgit, right? More than a trillion. Sorry, more than 1,000 billion. Yeah. So if you look at this, they also have quite a similar exposure as the previous bank. So they have funded building and construction industry, and also they have a similar pattern of the housing loan, 20%. And the rest consists of other financial institution and holding companies, and also professional and individuals, and general commerce and manufacturing and others. These are the exposure for OCBC. But let's look at what are the exposure by the geographical market also. And Singapore, they are the key market in have exposure 123 billion Sing dollar. So is very significant, but then they also do have some exposure in other market, for example, China. So OCBC Bank actually their presence in China is quite significant. So if you think that China economic will continue to grow in the long term, and OCBC will be a better choice. But then they can look at this exposure will be in Hong Kong, Taiwan, and other. But then the mainland China is only 9% of the total geography market, right? And Malaysia itself, 23 billion Sing dollar is less than 10% of your total loan exposure for OCBC. And then the rest coming from rest of the world. So okay, what are the results by OCBC? If you look at their 9 months core earning, right? Earnings, the total income actually surpassed 10 billion Sing dollar mark for the first time. Okay, so they also have a record 9-month result, which is a very decent result in this kind of environment. So there are strong underlying performance across banking, wealth management, and insurance. And also they proactively they have proactive balance sheet management drove the net interest margin uplift and the net interest income to record high, right? And they do have a significant milestone of sustainable financing commitment cross 50 billion. So and ahead of their 2025 target, which means they are giving out loans to the green sector that, for example, the building for renewable plants, renewable energy. They have all this exposure. They are considered greener lah. Okay. So they have quite prudent monitoring their and stress test of portfolio, their NPL ratio, non-performing ratio at a pre-pandemic level. That's quite a decent number. Okay, what are the targets? They do not give a forecast for 2024, but they already have a target for 2023. Their ROE to be above 14%, right? Grew from 11 to 12% to 14. And their net interest margin target to rise higher to 2.25 in the region of 2.25%. The CIR stand for cost to income ratio is going to stay around 40%, right? And the loan growth in low single digit range reflecting the market condition, and the credit cost around 20 basis point, 50% of dividend payout ratio, and they did pay out interim dividend of 50% based on their net profit. Okay, now let's look at the valuation of three banks. Bear in mind, this is not the buy or sell, but just showing from a chart basis. And I will share what are the metrics that investor can use to value a bank's is actually a price to book ratio, right? How much is the price you pay per share versus the company book value per share, right? What do you mean by book value? It's actually, you think about it, right? The book value is actually the value of their shareholders fund, right? It's using the asset minus up all their liabilities, which means what are the money left in the bank is belong to shareholders, right? And the money left in the banks, because the asset of the banks is mostly liquid asset, like your loan. So they are very liquid, can consider as cash. So which means if you are buying a one times price to book value, right? You are paying $1 for $1 asset in the company, in the banks. So in this one, if a ratio of more than 1, which means you are paying a slight premium compared to a ringgit asset in the banks. But definitely you must consider the banks have the the others qualitative aspect, like management, their brand name, their reputation, right? The network is also so it is not easy to build a bank. For them, they have more than 100 years of history, right? It's not easy to set up a new banks and to making the kind of money they are making now. So some banks, you need to pay a premium. So for DBS, if you look at their share price for 10 years chart, right? Of course, there is a bullish trend for 10 years. They are always, of course, they are up and down, but they are always went higher, right? They always went higher after the dip, right? And look at the price to book ratio, the highest price to book that the market gave to DBS, right? The investor willing to pay to acquire DBS share is actually 1.69 times, right? The highest valuation that achieved in the past 10 years is 1.69 times. And the lowest is actually 0.86 times, which means you are buying a discount of 14% for a ringgit, for a dollar of asset in DBS Bank. So of course, if you are a value investor, you must buy at the low, buy low and sell high lah. You also need to, the best is you can see from hindsight is that buy at the lowest point of price to book at 0.86 times, and then hold it, right? You double investment, right? For example, from I think $13 to $32 now. so what's the current price to book is actually 1.46 times. I would say it's actually it's not the highest, but it's slightly above the historical average lah. But then you look at the historical average after post COVID, right, it's actually came back down, mainly due to the growth in their company, the bank's book value, right? Because the share price didn't grow much, but the ratio came down, which means the banks register a growth in their book value. Of course, you can continue to wait and see first before you buy, or you just buy for long term and using your dollar cost averaging method to buy more when the price came down, right? Okay, the valuation for UOB banks, in terms of the valuation wise, they are a lot cheaper compared to DBS Bank, and share price also in a long term upward trend. And in terms of highest price to book, right, is 1.5 times, and the lowest is 0.84 times. They are quite similar with DPS, but then in the current price to book level, they are only trading at 1.08 times price to book, which is closer to the lower side of the price to book range. Which means if you are an investor, want to have an exposure in banks, right, probably UOB bank in terms of valuation could be slightly more attractive than DBS bank. But then there's only one aspect of the valuation. You must consider the other aspect of the company, for example, the growth prospect, the asset quality and things, right? But don't forget the DBS bank always has a higher ROE, which means they can generate higher return for their shareholders. That's why they command a higher premium in terms of their valuation. And let's look at the last bank, OCBC Bank. The highest is 1.54 times price to book value, and lowest is 0.8 times, and the current price to book is 1.12 times, right? Also nearer to the lower end of the valuation. Also is a right, it is a very decent company overall, OCBC Banks. All right, for summary for you guys, this will be my summary for these three banks in terms of some of the metrics the investor can use. In terms of price to book, right, their UOB and OCBC are similar at 1.1 times, whereas DBS at 1.4 times price to book. You know, the P ratio, they are all three are quite similar, 8.6 to 9.1 times. And in terms of dividend yield, right, the yield, the OCBC banks actually give the investor the highest dividend yield of 6.2% compared to DBS of 5%. But in terms of the earning per share 5 years growth, right, what the company deliver their earnings, right, you can see DBS actually have a highest earning per share growth for 5 years at 13.3%, compared to other around 6%. So which means people are willing to pay a slight premium to purchase a company that can deliver the growth, the earnings better, right, at 13%, right? So it actually depends on what you are looking for. If you're looking for more aggressive or growing banks, right, the best bank in this chart, it will be DBS, right, because the company did perform relatively well and better compared to other two banks. And if you're looking a stable dividend yield, and also the company that is not overly pricey and give you a decent dividend yield, right, and decent earning per share growth, will be UOB and OCBC. Right, there's no right or wrong. Just depend on what are the risk appetite do you have, and what company suit your needs, right? Right, that will be my sharing on all these banks industry. Okay, for now, after an hour sharing, right, I will also share what are the website that you can use for free as a tool for you to make a informed investment decision, right? you can log on into hg.agristracker.com. Is a corporation from AgriStracker and Singapore Stock Exchange, and also so we do publish this data, and we have all this algorithm to to filter it. What are the companies that fulfill certain criteria? For example, we categorize as what are the company that is rising star, dividend kings, mod defender, and cash holder, and continuous hero. Do check out our website sg.agristracker.com. If you are a trader, we also have something for you. We have tradable stock list, rock bottom, what are the stock that actually fall below, and also what are the uptrend support opportunity, and also downtrend oversold opportunity, uptrend overbought alerts, and downtrend resistant alerts. We have all this data available for you to help you save a lot of time while doing your own research, right? All right, this will be my last slide for tonight. Do at the Facebook search for Singapore Market Campus, right? Singapore Market Campus, and I think our colleague will share the link in the comment section, so that you guys can click on the link to join our stock market Singapore Market Campus, right? It's a group that people will share information about the stock market in Singapore, and together we can learn from each other. And I think sometimes you learn together is actually better than you do it alone, right? So you guys do spare some time to check out our website. Is tools are there. Whether you want to grow your wealth is depend on, are you willing to spend some time and your effort to generate your side income and passive income from investment. So that's all I have for tonight's session. So if you guys have any question, I'm very happy to answer all your questions. So if you have any question, do type it out in the comment section below, so that I can try my best to answer you guys. If there's no question, I think we're already almost an hour after we're almost an hour into the session. So probably I will wait 30 seconds more. If there's no more question, then we'll end the session for tonight. Okay, seems there's no questions. I would like to thank you everyone that joining us tonight. I think almost every month, we will have a certain sharing on the Singapore market. If you'd like to know more, do stay tuned and click follow and like our Facebook page and also YouTube channel, so that you can follow what is our latest sharing. And I will see you again soon. Thank you very much, everyone. Good night.